During the Asian session on Tuesday, spot gold staged a mild oscillating rebound after the sharp plunge in the previous trading days, with market panic gradually easing. Currently, spot gold is trading in the range of $4,355, $4,360 per ounce, and intraday volatility has converged significantly compared to the dramatic drop of over $200 in the prior session, making today's trend relatively stable. Looking back at the previous trading days, the performance was disastrous. Gold plummeted sharply from around the all-time high of $4,549 per ounce, dropping to $105 in a single day with a staggering 4.45% decline, completely erasing the entire weekly gain from last week and touching a low of $4,303 per ounce. In fact, this plunge was caused by a combination of factors. Investors sought to take profits and secure gains at the end of the year. The CME suddenly raised margin requirements for gold futures, and market liquidity tightened as the holiday approached. Any selling pressure could easily trigger sharp volatility, and under the impact of these factors, gold prices fell sharply. In terms of geopolitics, there have been conflicting signals recently, becoming the core of short-term market games. The crucial Russia-Ukraine situation has been volatile. There are occasional reports of progress in the peace agreement and occasional frictions. This uncertainty has actually provided potential support for gold prices. Additionally, when Trump met with the Israeli Prime Minister on Monday, he directly warned that the United States would quickly launch a strike if Iran restarts its nuclear program. At the same time, the United States carried out its first strike against drug trafficking targets in Venezuela. Tensions in multiple regions have escalated, which will limit further declines in gold prices and underpinning gold. On the policy front, all eyes are on the Federal Reserve's moves. Trump has been taking frequent actions recently, not only threatening to sue current chairperson Powell, but also planning to announce the new Federal Reserve chairperson in January. The market generally expects the new nominee to be dovish, coupled with the market's consistent belief that the Federal Reserve will cut interest rates in 2026. These two factors combined will still be an important support for gold prices in the long term. Do not turn bearish on the long-term trend due to the short-term sharp plunge. Short-term technical outlook analysis from the daily chart perspective. Gold closed with a large bearish candlestick with a full entity in the previous trading day, directly breaking below the 5-day and 10-day ever-moving averages. It only received short-term support near the 20-day moving average, but the rebound momentum was weak. This signal indicates that the short-term correction has already started. Now, both the 5-day and 10-day moving averages have initially turned downward, forming short-term pressure. In addition, the deviation between gold prices and short-term moving averages is relatively large, so the market is likely to enter a technical consolidation phase and will not rebound sharply in a short time. Keep or sellable burned. In terms of resistance levels, the primary short-term focus is on the $4,380, $4,382 range. This range corresponds to previous highs and is near the 5-day moving average. It is very likely to form continuous resistance during subsequent rebounds. If this level cannot be broken, the rebound will be difficult to continue. If it can successfully break through, we can further look at the $4,400 integer mark, which is an important psychological resistance and will become the core of short-term, long-short games. Once it stabilizes above $4,400, the market will have the opportunity to gradually return to a strong trend. In terms of support levels, the first strong support below is in the $4,310, $4,303 range, which corresponds to the 20-day moving average and the low of the previous trading day, with relatively solid support strength. If this area is broken, it is likely to continue to decline. Looking further down, there are strong technical supports near $4,286 and $4,274. These two levels can be focused on as important defensive lines for short-term corrections. Important disclaimer: all the above content is for reference only and does not constitute any investment advice. Any trading operations conducted based on this information are at your own risk of profit or loss. Want to receive real-time interpretations of gold price trends and market news analysis as soon as possible? Subscribe, like, and share with your investment friends around you now. Thanks for watching.